Yes, so we can start with welcome.
Good evening, members and the esteemed speaker for the day, CA.VIJAY MANIAR sir. And I am Pannaraj, Vice Chairman of SIRC ICAI, and I am requested by the office bearers, the Chairman and Secretary, to host today's program. So a warm welcome to the erudite speaker, Vijay Maniar sir from Mumbai. Thank you very much for accepting our invitation and being here, sir. And it is one of the topics that is members, you all, I warmly welcome you all for this 2-hour webinar on audit quality maturity model. I think most of the people are still under the impression that it is another area where only corporate entities are required to follow this. So this is an area where to test yourself, self-testing of your performance and in terms of compliances for audits of both corporate and non-corporate entities. And it is very, very important. Of late, it is seen that the quality of reporting is questioned by various agencies. It's an unfortunate, but it's a fact that be it C&AG or SEBI or the CBDT, all these people are, all these agencies are raising the voice against the not so helpful quality that is being maintained in the audits. It's a fact we have to accept, because the speaker for the day is also one of the senior members of our fraternity, and we together should be able to gear up ourselves to see that our quality of compliances and reporting, assurance standards and standards on auditing and standards on accounting are complied in full, and the assurance quality is improved. So this is the objective of today's program. So I request the speaker to take over the topics through, and before I hand over the proceedings to the speaker, I'll take 2 minutes to introduce the erudite speaker for the day. Vijay Maniar sir is a member of the institute, a fellow member of the institute, and having 35 years of professional experience. And ASA and his work experience is ASA and associate with ASA and Associates, a top 10 accounting and consultant firms of India, as an advisor and mentor to guide the Mumbai branch operations and teams, including the leadership team, to strengthen the practice. SR Bartleby and Co. LLP from 1999 to 2021, engagement partner for statutory audits of large listed as well as unlisted corporates, Indian multinational entrepreneur PE funded, including those which undertook capital market transactions. Sector-focused retail, pharma and chemicals, packaging, hospitality, manufacturing and real estate. Extensive audit committee or board meeting experience, having attended more than 400 such meetings. Special invitee on Accounting Standards Board of the ICAI for 2 years, and a member of Accounting and Auditing Standards Auditing Committee of BCA since more than 15 years. A regular speaker at various forums, has co-authored guidance note on Division 1, 2, and 3 of Revised Schedule 3 of the Companies Act issued by ICAI, and also guidance note on Revised Schedule 6 to the Companies Act 1956 issued by the ICAI, and mandatory accounting standards, extracts from published accounts issued by BCAS. Maniar and Maniar, Chandrakant Mehta and Associates was the firm he was associated with from 85 to 99. So he has set up the professional practice and created infrastructure, engaged with entrepreneurship as a trusted advisor and sounding board, developed and mentored team to grow with him. So with this, I present before you the erudite and very experienced speaker for the day, Vijay Maniar sir. So this topic is not so very interesting, but still it is very, very important for us to know and adopt in our day-to-day life. With this, I hand over the proceedings to the speaker. Over to you, sir. Thank you.
Thank you, Mr. Pannaraj. So so there would be, before I start and share my screen, let me, start with, saying that why this topic is important, right? One second. Is my screen visible?
Yes, sir.
Okay. Okay. So, so thank you, Mr. Pannaraj, for the kind words of introduction and setting the stage for me to take over. And as you rightly mentioned, my experience is that we are, we look at any accounting issues very passionately. However, anything which comes to, auditing standards, we find it, audit is really dull, boring. Um, uh, uh, you know, we do not know, it's a last priority. If client has some accounting issues in mind, then we would, roll up our sleeves, burn midnight oil, and provide solution to the client. But I want to emphasize that accounting is the responsibility of the management. Our responsibility is to do the proper auditing. However, somehow, we find it not engaging enough, and hence we don't spend enough time for documenting or planning. So that is one thing I think we as the fraternity, I think we should, focus on the auditing standards. Keeping that in mind, the institute has, has been doing a lot of things to bring attention of all the members, so all of us, as to how to improve the audit quality. So first thing is, institute has got this FRRB, and you must be aware, there is a FRRB, so Financial Reporting Review Board. Now that comes up and, based on the review of the financial statements, it issues publications as to what are the common mistakes which they have found and how do we correct those mistakes. So, right, though FRRB has been set up many years ago, but, if you see from 2010, FRRB has been regularly updating all of us, saying that what are the areas where we should focus based on the review, what are the areas where they've found mistakes, which are the common mistakes. And this is what is the publications, and you would, members can go and, read those publications. How do FRRB work? Let's look at how do FRRB work. So FRRB, based on some sampling, would pick up financial statements for the review. And how the review is being done? The review is, there is first the technical reviewer. So there is a technical review team which reviews the financials and gives its view on the financial statements. Then there is a group of chartered accountants. So there is a group which has been formed by the institute, comprising of the members of CA members. They will look at the comments of the technical reviewer. In addition to that comments, they will also review the financial statements. And lastly, they will compile the comments, including the comments of the technical reviewer. And lastly, the final report is reviewed by the board. What is the scope of FRRB? Because FRRB doesn't come to our office and review. So the scope of FRRB is based on the review of the financial statements, that the financial statements are in compliance with the accounting standards. The disclosure requirements have been met. So if it is a company, then the Companies Act disclosure, accounting standard disclosure. If it is any a listed company, then SEBI disclosures. If it is a bank, then whatever disclosures which are mandated by RBI, banks or NBFC, or if it is an insurance company, then by IRD. So the purpose of this is, as I said, it is a compliance with the accounting standards, the disclosure, and whether the reporting by the auditors is being done. It is based on just the reading of the financial statements. And these are picked up, as I mentioned, based on the sample which the institute picks up. Also, so that is based on the suo motu, and there are also special cases. Now, what are the special cases which are there? So if there is any, government entity or the regulator which feels that there is something not appropriate in this financial statements, so they will refer those financial statements to FRRB or institute, and institute will in turn refer it to FRRB. So it could be referred by, say, RBI, it could be referred by SEBI, it could also be referred by Election Commission, so IRDA. So, all the regulators can refer. Also, if there are some newspaper reports based on the reading of the newspaper items, these cases could be picked up by the FRRB. So that is why 76% based on the trend is suo motu, and 24% is based on the special cases, means those are the cases which are referred by the regulators. And this is the trend which is there from 2009-10 till 2021, that how many special cases were there and how many cases which were taken by suo motu by the institute. So if what does it happen after it happens after the review? So what is the action which is taken after the review? So if it is material non-compliance affecting true and fair view of the financial statement, so if it is something which is materially wrong, then the action is taken against the auditor and the matter is referred to the director discipline. And institute does not have any authority to act against the entity. So if there is a material non-compliances by the entity, so for example, the financial statements, as I mentioned, is the responsibility of the management and the company. And if there are any errors, serious errors, then it can inform the irregularity to the regulatory body relevant to the enterprise. So that is on the material non-compliance. And non-compliances which are not material, it will bring the non-compliance to the attention of the auditor by way of advisory. And also, our firm gets peer reviewed. So those observations are also given to the peer review board, so that any peer reviewer who comes and review our firm's policies and processes will have those comments handy with them. So they will also focus on those points. So up to date, about 1,000 reports have been issued, of which 63%, which is almost 600, there is an advisory issue. 17% they have referred to the appropriate authority. 16% no material non-compliance is observed, and 4% were reported to Election Commission of India. So this is what I'm saying is the idea of the institute and the efforts taken by the institute to, improve the quality of the financial statements, improve the quality of audit. So I'm giving you some background as to, first is the FRRB, which is there. Then we'll go on, other initiatives taken by the institute. And lastly, we will come to the new, topic proper, which is on the, AQMM version 1. So that is how, my presentation, goes. Now, based on the, comments, what are the comments which were there of, FRRB, though detailed observations are available. But if you see major observations, so number one, the maximum observation is on Companies Act. Now, I think that's not, appropriate for us as the, chartered accountants, that FRRB finds major non-compliances with the Companies Act. We are auditors and we should have the expertise of understanding of the Companies Act compliances as far as the financial statements are concerned. If the, if it is a bank, then we should have expertise of, interpreting RBI circulars, SEBI, then SEBI directives. But, this observation that 18% non-compliances with Companies Act, in my opinion, is far higher than it should have. Secondly, if I see from the accounting standard perspective, AS3, which is on a cash flow, the maximum non-compliances is on AS3. Now, my experience is that we don't focus on, my experience is also, and this is getting reinforced by the FRRB comments. Cash flow is by and large the arithmetical, it is worked out based on the finalization of financial statements. So we don't focus on enough on the cash flows. I would strongly suggest that we should start planning and execution of the audit based on the understanding of the cash flow. Because cash flow is, where the cash has come in and where the cash has been expended. And if we understand the cash flows properly, we would clearly come to know what are the focus areas for the audit for that year, what are the risk of materials misstatements. So my earnest request is, don't consider cash flow as the arithmetical exercise which is done after the final, balance sheet and the profit and loss account is finalized. Please start with the cash flow, understand the cash flow, understand the implications on the significant risk, what are the events, what should be the focus area, and accordingly design nature, timing, and extent of auditing procedures. As far as Ind AS is concerned, so this was as far as the accounting standard is concerned. So, our accounting standard, but Ind AS is concerned, correct? Ind AS, the observation of FRRB has been the maximum non-compliances is 107 and 109, which is, these are the financial instrument standards. They are really complicated. This was the initial period of Ind AS, adoption. Probably that is where, but I think, these are so critical standards, and it can change the face of the financial statements if we don't understand properly these complicated standards. So we should focus on these complicated standards. And even which are the other ones which are there? And the other one is the 108, which is on segment reporting. So we don't focus on, because any stakeholders, they focus very closely on segment reporting. So segment reporting mainly is a disclosure standard. However, there is a lot of focus with the stakeholders, do for interpreting specifically for the companies who are into different businesses. The next is, as I said, first was the FRRB. Now let's look at what is quality review. So quality review board was set up by the government under the provisions of Chartered Accountants Act, and where there are few chartered accountants. So I think 5 chartered accountants are there, 5 other professionals are there, and the chairman is there. Now quality review board, the purpose of this is, word is quality. So FRRB also to improve quality. Quality review board is also improve the quality. So what is the scope of quality review board? So it is to recommend to the institute for the quality of service. Because, quality review board will, the members will come and review the financial statements, review the files. So idea was to, review the quality of service which was provided by CA and guide the members for a quality of service and adherence to various regulatory requirements. So this was, I do not know if you were doing some audits, either listed companies, mainly listed companies. There was a quality review board where members would come and review the files of a particular, client. Now, quality review board, the scope was significantly higher, but after NAFRA coming in, so the companies where which is within NAFRA jurisdiction, quality review board will review financials based on the instructions of NAFRA. Otherwise, NAFRA would undertake those reviews. So the quality review board's, scope has been reduced primarily to non-NAFRA companies, unless it is informed by NAFRA. Now let's look at what are the observations and over the period, because this quality review board has also been set up many years ago. So what was the statistics of the review? So this is about 500, more than 500 plus of reviews which were done, where it says that 34% based on the review, 34% were files were generally acceptable. 60% it required improvement required, and 6% where significant improvement required. Right. And this is for 2000. So this one was, so this is one was the latest one where, they've reviewed this about 200 plus, files where improvement required was, 3%. Significant improvement required was, improvement required was 82%. Significant improvement required was 3%. So 6% on an overall basis came down to 3% in 1999-2000. Now, if you look at, from the auditing standards perspective, now this is the, observations based on in 1999-2000, based on the auditing standards. What was the, major comments? The major comments is on SQC1. So we will deal with, standard on quality control SQC1, because, that is the foundation of audit quality maturity. And if you see that, this comments on SQC1 on the forms, I think it's not, augur well for the forms, because this standard, SQC1 standard has been, announced right from 2009. And it is applicable to all the firms. It is not, it is applicable only to listed ones or the large firms. It is applicable to all the firms, small firms or large firms. And it is very important for us to know what is there in SQC1, understand that how we can comply with, because this is the foundation, this is the mother of auditing, standards. Also based on the, so, QRB would review both the accounting standards and the auditing standards. FRRB reviews only the financial statements, whereas QRB comes to our office and reviews the file and the financial statements. So that was SQC1, as I mentioned, was on the auditing standard piece and all the other, standards on auditing. And this is on the accounting side. Even here, if you see, the maximum comment is on AS3, which is on cash flow. Again, what I'm saying is cash flow is a arithmetical exercise, but we don't focus enough. Again, I'm re-emphasizing that please plan your auditing procedures based on the review of the cash flows, understand the cash flows. If there are any irregularities which has happened during the year, the movement of cash one should be able to capture. So plan, review in detail, understand the cash flows. Under any gap, cash flow is a cash flow. Whether one looks at Indian GAAP, whether one looks at Ind AS, whether one looks at IFRS, whether US GAAP, any gap which is there. Cash flow is the cash flow, movement of cash. Understanding that movement of cash is very, very important. Now, let's look at what were the observations on SQC1. And as I said, why I'm focusing on this, because if we understand what are the expectations, what are the requirements, then it is easier for us to understand the audit quality maturity model. So what does SQC1? So what does it entails, and what has been the observation of QRB? So observation is that it did not. So there was non-established comprehensive system to provide reasonable assurance that firm and its personnel comply with professional standards, regulatory and legal requirement. One of the fundamental objectives of SQC1 is that the firm and its personnel comply with the professional standards, regulatory requirement, legal requirement. And number two is the report which is issued is appropriate under the circumstances. See, how do we get, think about it as a stakeholder and not as the auditor. When you review the financial statements, not as an auditor, but as say you want to invest into shares, or you want to take this as a client, and we are reading the financial statements. When will we get comfort and confidence on the management, on the financial statements? Because that's the document which we are reading, and that's a document based on which we will decide whether to accept the client or not, whether to invest into the client, whether you want to get into the board of this client. Unless we find that the firm which is audited, if there are errors in the financial statements, what will be your view? You will not rely on the financial statements, and hence your confidence on the financial statements in the company, on the auditors will come. So the purpose of standards on quality is that the firm and its personnel comply with the professional standards, regulatory and legal requirements, number one. And number two is the report which is issued, the certificate which you are signing, is appropriate under the circumstances. It is not saying whether the report should be qualified, modified, clean report, but the report is appropriate under the circumstances. Also, SQC1, there are 6 elements of quality control which SQC1 is describing. And let us understand what are the 6 qualities. Mind you, I am repeating, the standard is effective right from 2009. And hence, it is already applicable. In fact, this is getting revised and updated into, new standards, which has got this plus more. And hence it is important, based on the observation, I think that we understand what is the expectation. First and foremost, it says the leadership responsibility is, it is the responsibility of the leader. It is the responsibility of the main managing partner to ensure that there is a quality within the firm. Why it is ensured that it is the leadership responsibility? So that any decision which is taken by the firm, the quality is of paramount importance, because it is the, the leadership responsibility. In a large firm, if you are having a large firm and if that responsibility of quality is entrusted to some other partner, that partner should have enough authority and power to enforce the quality. The idea is that any commercial decision which is, is taken keeping in mind the quality. So quality is of paramount importance, and then the commercial, because all of us are commercial entities. But the purpose of this is that commercial goals, of course, are important, relevant, very relevant. However, it cannot be at the cost of quality, and hence it is the responsibility of the leadership. Secondly, ethical requirements. Would you, what does it entail first? Let's look at what is ethical requirement. So it would be, say, integrity. So when we accept the client, is the integrity of the client. So we do background checks, right? So background checks, does it come anything out of the background checks? Is the integrity of the client is questioned? Is the provider of capital, is there any integrity which is being challenged of the promoters, key shareholders, provider of finance? Is any of them are into any of the money laundering? Is the business of the company is that the integrity could be challenged? So the idea is that integrity has to be paramount when we accept, this ethical requirement. The next is the objectivity. So as auditors, we need to be objective, right? Unless we are objective, who will rely on the financial statements? The next is professional competence and due care. So we should be competent to do it. So I think I'm not getting into detailing as to what is SQC1, because this is not the session is not for SQC1, but I'm just laying the foundation, because we'll deal with it as and when when we look at AQMM. Confidentiality, very important. We should not discuss any of the client matters with anybody. In fact, there has to be a wall, so that if one is doing the audits of public interest entities, one engagement team should not discuss the challenges or some information with the other engagement teams, because one does not know where the confidentiality stops. Each client is, the information about each client is confidential, more so when these are public interest entities. The next is acceptance and continuation of client relationship. It cannot be undermined. So we do all the background checks. We do look at the integrity of the client, look at the business, look at the promoters, right? Look at all the, background searches around this, and this is what we will deal with. Human resources also will deal with, which has been covered. But the idea is that, in SQC1, it says the right from the recruitment till, the how do we counsel the people? How do we recruit them? How do we review their performance? How do we evaluate their performance? How do we promote them? All this is the area which is there in SQC1. Engagement performance is about the documentation piece around. So right from beginning of the engagement till the signing off and what is expected to be done. And last but not the least, all this is internal. What is the monitoring mechanism based on which the firm is able to, how the firm is auditing itself, that it is meeting the quality objectives. But these are some of the few points I would want to discuss. These are very, very critical. Not only for the quality, but also, this is becoming increasingly important topic with all the regulators, all the file reviewers. First and foremost is the independence. The issue is that when we accept the audit, are we independent? If we are not independent, we cannot accept. And independence is, it could be that, we have some business interest, we could have some financial interest, we could have, the views of the management is such, they are very aggressive, right? You would have seen, some management is such that they will always take very, very aggressive step. It's a very, it can impair our independence, or some management says does not give us enough information and have a very, very short timeline to complete our work. It of course impacts our independence. So if you find any such challenges, please review the quality standard. It gives us a lot of guidance, around this. It also says, if there is too much of familiarity threat. So, so mandatorily, in case of listed companies, the partner needs to rotate out after every 7 years, that you would be aware. But if you find that, there is some senior personnel who is there on the engagement for a long period of time and it becomes too familiar, we need to maintain good relationship, but it should be professional relationship. We should not have any too much familiarity with the client. So if there is a familiarity threat, then we should change that team. The client would expect continuity, same team, and that is one of their expectations. But just to, ensure that we, in the process, we don't breach any independence, of our independence of the team, that, this needs to change. What happens if the client gives us very expensive gifts? I think we should have some policy to say that, we will not accept, any gifts. But, there is a custom that, we get gifts during Diwali, during Christmas, during, other festivals. We should have policy if we need to accept the gift, that the amount has to be minimal, or what kind of amount up to which we can accept the gift, just so that we do not impair the independence. In fact, for the larger firms, there are so much of a guidance which is given that, one cannot go out with the client on a holiday because it could impair, or one cannot go out with the client for say any say IPL matches. The idea is that when we have such kind of these occasions, then the chances of we impairing or perceived chances of we impairing our independence. So we may continue to be independent, but if people see us as going out on a holiday or watching cricket matches or football matches together, it is perceived that we are not independent, and hence there are, just for the perception, there are so many rules and regulations and guidelines which are given. So I think the idea is that we make sure that we are independent. The next is consultation. So it is not that we need to be expert in everything, right? Because ultimately we are accountants, and each client may have different challenges, different situations, and if we do not have those expertise, we should do consultation. Consultation could be done internally, consultation could be done. So if there is a large litigation, how do you deal with it? Whether to make provision, whether to show it as contingent liability, or is it a frivolous litigation, and it is to be ignored. Now, how do we come to that conclusion? We are, and it is a legal matter. We can, of course, go and consult. Or if we have any challenges, say, for example, there is a complexity in the accounting, some accounting, and client has entered into some complex transaction. How the accounting needs to be done? We can always consult, if we have any expert within the firm or any other partner or any other, so that the culture of consultation should be encouraged, and that is the whole consultation. So if there is any IT, correct, so we may or may not have the understanding of the nuances of, say, company has implemented a very complex ERP system. We may consult how do we go about doing it. If there is any situation, for example, there was COVID, and there were challenges about how do we physically verify inventory. Institute came up with the guidance, but firm may have its own guidance, and then do some consultation process. If the company, if there is a non-standard audit opinion needs to be issued, we can consult with others within the firm, saying that this is the situation. Am I missing anything? Is it the appropriate wording which is there? Because ultimately audit report is read by all the stakeholders. The next is the difference of opinion. So what happens if we have done the consultation, and it could be formal, informal, but I'm talking about mainly formal, or we have approached some experts. If there is a difference of opinion between us and the expert, how do we deal with it? Correct? Because it is possible that we may have a different view as auditors, and expert or those we have consulted, we may have a different view. So how do you deal with the difference of opinion? And there has to be a policy and procedure that if there is a difference of opinion, then how this is dealt with. Bottom line is, we cannot sign the opinion till the differences are resolved. The next is engagement quality review. This is becoming increasingly important in the new standard, which international standards on quality. There is one whole standard which is on engagement quality review. The idea of engagement quality review is that the engagement team does not take any biased opinion, right? So that there is an engagement quality reviewer partner. Now, this is mandatory for, all the listed companies and public interest entities. Firm may set up some additional criteria for engagement quality reviewer to be appointed. And the roles and responsibilities are, to ensure that what are the significant risks which has been identified, and is there those been addressed through nature, timing, and extent of auditing procedure, reading the financial statements, audit report, independence. So these are the few areas where engagement quality reviewer is must. And you would have seen NAFRA reports and all where they have focused on the roles and responsibilities of engagement quality reviewer, and what is the evidence that engagement quality reviewer has reviewed. So the only sign off is not the evidence, and that is what is there. NAFRA's view is the only sign off is not. So please be mindful if you are having any engagement where there is an engagement quality reviewer, there is evidence of the review, and the proper sign off, proper consultation, timely consultation, it is there. So this is the background. Why I created this background, because now there is mainly the questions and all, but this is the background that what institute is doing. So number one, FRRB, as I'm repeating. Number two is QRB. Number three is we discussed about SQC1, which is there. And now, institute, and what I understand is this is first of its kind. Or probably, some other countries may have done, but it is not generally, I did not lay my hands on. This is to, give guidance to us, saying where are we as far as the audit quality is concerned. And it could be on a various maturity model, because it could be at we could be at various stages. That is number one, because it is saying maturity model. So there are different levels which are there. And since it is first version, so I understand that there would be different versions which will come in. So institute will also understand based on the comments that is there anything else which is required to be done. What I understand is in the last week, in the council, council has revised this AQMM. I could not lay my hands on this. So this is where based on version 1, if there is any revision, then that will be dealt with separately. Why this has been also been done? So it was, one is the need and the initiatives by the institute to improve the audit quality, but also, based on the peer review, there is a peer review which is there. And what were the comments of the peer reviewer? That technical standards are not followed. Number one, audit documentation is not adequate. Management representation is not taken. Written communication with those charged with governance not issued, and no practice manual. The idea is that this is very fundamental, because if this is the observation of the peer reviewer, right, then the whole quality could get questioned. So as I said, we do a lot of work around the accounting standards. We do, my experience is we do over audit. However, we don't document. And the peer reviewer is an independent person. The idea of documentation is that any experienced auditor, based on the review of the work paper, will come to the same conclusion which an auditor has come. I'm repeating, any experienced auditor who is not involved in the audit, by reviewing the work paper, will come to the same conclusion which the auditor has come. That is the level of documentation which is expected. I'm repeating, please be mindful. Please spend time on identifying what is it that we should have a focus area, because we spend more time on audit than required. However, we don't spend on the focus areas, number one, or we don't document. So the idea is that not this particular AQMM is actually a joint exercise. Correct. So it's a collaborative approach by peer review board and Center for Audit Quality. So any peer reviewer who will come and review the files, this is the areas where peer reviewer is going to focus. So if we have worked, we know which are the areas which peer reviewer is looking for. We know what are the areas where auditing standards expects us to look at. And if we can comply with them, then peer review, we can, process will be smoother. Our audit quality will improve. The confidence in the financial statements will increase, and the credibility of profession will also increase significantly. So what should we do for enhance the quality? So correct. So users, this is the same thing. User depend on audit quality to have confidence. I mentioned quality is a very judgmental, right? Good quality, bad quality, okay quality. So it's a very judgmental, and it's very complex. And this is something which is coming. There is a framework of audit quality which will come in. And it says that audit quality should be improved at the engagement level, which is the engagement team's responsibility. At the firm level, which is the leadership responsibility, and at the national level, which is all the regulators' responsibility. And what are the objectives of the framework of audit quality? Correct. So as I said, to increase this quality, the framework is in process of getting drafted, but the overall objective is to raise awareness of the key elements of audit quality. So what does audit quality mean? What are the areas? Encourage key stakeholders to explore ways to improve audit quality. Because each stakeholder, it is not only us who it is our responsibility. It is also the responsibility of the stakeholders. And you would have experienced that with NAFRA coming in and action, the report against the auditors getting highlighted, the audit committee, those charged with governance, even the management have started accepting the kind of questions which auditors will ask. The auditors have, I know for a fact that auditors are now putting their foot down, saying that we will not be able to complete the work within the deadline if you don't provide information on a timely basis. And the audits getting delayed if that information is not provided, or that significant issues not resolved to the satisfaction of the auditors. And last is facilitate greater dialogue between the stakeholders. So encourage stakeholders to improve quality, raise awareness. So I think idea is everywhere. The idea is, how do we improve the quality? Just to repeat, what does audit quality mean? So it is performing work, and we have seen in SQC1, and this is a little extension of this quality. So first is performing work in compliance with professional standards, applicable regulatory requirements. I think this is what we have seen. So we have to do work as per the standards on auditing, number one. If there is a legal and regulatory requirement as per this. And number two, issuing audit report appropriate under the circumstances. I think this also we have discussed, that our report should be appropriate. What we are issuing should be appropriate. But in addition to this, if the firm has some higher quality policies and procedures, we should comply with that. So the regulatory requirement is the bare minimum, but the firm may have some higher quality standards. So for example, some firms have decided that if there are NAFRA companies, we will not do any non-audit work. That is a higher standard. Otherwise, there is a provision under Companies Act 144 where what kind of non-audit services can be provided, not provided. But somebody will say, okay, I will not provide any non-audit services to NAFRA companies or public interest entities. Or SQC 1 says that engagement quality reviewer for listed companies is 7 years, but the firm may decide that it is not 7 years but 5 years, or that other criteria which, if they are met, then that engagement should also have engagement quality review. And last, but this is the qualitative factor, saying that engagement team should be able to raise concerns without fear. So how this ethics, which we discussed, the ethical team behavior is something which is how one can measure audit quality. Now coming to this, so I think this background I've taken 1 hour. Hopefully, I'll be able to close it faster now, because now these are all the questions which are coming on the areas which we have discussed. So we'll run faster now, and wherever you have questions, I'll be happy to answer. And it's yes, no, subjective, but what is so what does AQMM version 1 says, that it will apply to firms auditing following entities. So number 1, AQMM is applicable to auditors, correct, who are auditing listed entity. That is number 1. Number 2, banks other than cooperative banks, except multi-state cooperative banks. And number 3, insurance companies. So these are the 3 firms which are auditing. So firms which are auditing these entities. My question is, it should be applicable to firms auditing companies which are borrowing more than certain amount, say 100 crore, 500 crore, because this becomes by default public interest entities. So the firms which are auditing the entities which are borrower for more than certain amount should also be there. Secondly, why cooperative banks are not included? You would have seen some kind of scams which has happened in cooperative banks. So the auditors of cooperative banks, it's a very it's a public interest entity. Cooperative banks accepting money from public and lending should, in my opinion, should also be covered. Before we start this. This is recommendatory in the first year, and this was announced on 9th of January last year. So it is recommendatory in the first year. What I understand is it is up to recommendatory up to 31st of March 23. So today it is recommended. So please go and do truthfully where you stand. Evaluate the areas where you need to focus. Evaluate the areas which is your strong points. And this will take you to the next level as the auditor. And what are the advantages also, we will see. So what I'm saying is the institute has taken a very, forward-looking step by looking at and giving us the guidance as to areas where we need to improve. Look at it as, it is, since it is voluntary, it is not mandatory, but it will become mandatory in time to come. So today we know this is voluntary. We can focus on those areas where we need to do improvement. But also the other side of this whole guidance is you will find it is subjective. Correct. Number two is that, there is same questions or same requirements is at multiple places. And there is a marking system for each of the questions. So if we don't, understand or apply it well, this, you may, come to conclusion that your qualities standards are significantly higher or lower, but it may not be the case because, let me repeat, peer reviewer will come and pick up from this. They are focusing on these areas. Now let's start looking at, what are the, main areas where AQMM is giving us guidance. So first is practice management and operation side, and it will run through all this, but it is maximum to 80 points. So it is practice management operations. This is human resource management, which has 240 points. And this is practice management strategic and functional, which is 80 points. So, so total 600 points or 600 marks, which one can get maximum out of this scoring. Mind you, this scoring you have to do. We have to do. It is voluntary. And what does it says, AQMM? It says if you take up to 25% in each section, then you are at level 1. Level 1 means it is you are at the nascent stage and will have to take immediate steps to upgrade its competencies or will be left lagging behind. So if you are level 1, you have to take immediate steps. It's a red flag. If you are at level 2, that means you are about 25 to 50% in each section. That means you have made some progress, but we'll have to develop further to reach highest level of maturity. So this is on level 2, 25 to 50%. Level 3 is, you have done significant adoption of standard and procedure and should focus on optimizing. So this is level 3, and level 4 is that there is a maturity which is there. So please do it, allocate, truthfully and honestly, look at where you stand in each of the section. There is no guidance, if you are, 25% in one and 50 or 75% in another, where you stand, but there is an implementation guide which the institute has also come out with, where it says that if you are 25% in any of the section, that means you are at level 1. And hence, it's a red. So please, it's, we are already in September. So you have 6 months or 7 months to do this to voluntary, but if you do it immediately, so after we say tax audit season is over and if you start doing where you stand, you will have enough time to, evaluate and take corrective action, so that once it becomes mandatory, then, you are confident of, reaching out to the stakeholders that your audit quality is high. However, whatever is your evaluation, it cannot be put on the website or on a letter. However, if in the course, and this is becoming increasingly that auditors or management or those charged with governance audit committees will ask these questions as to where are you in the audit quality maturity model. What are the comments? There it can be shared on a one-on-one basis, but otherwise it can't be published on a to general public at large. Now coming to the questions. The first is the question is revenue from audit and assurance, and it says if it is 50 to 75%, then 5. Above 75%, so 50 to 75% of the revenue is there, then it is you are at 5 marks, and above 75%, then you are at 8 marks. So you get 8 marks, and total maximum score is 8 marks. My comment is, this is a split of revenue between audit, assurance, and non-audit. So, and audit revenue will be, statutory audit, tax audit, forensic audit, and all those kinds of audit. And non-audit will be, say, any M&A transaction, or tax services and all. I'm not sure why this is required, because even if the firm has one listed account, firm needs to go through this process. Peer review will be there. Firm will have to do voluntarily or subsequently when it becomes mandatory. So revenue split, whether it is 50% or 5%, so long as the firm is rendering assurance services to those entities which is listed, banks, insurance, and blah blah, then the firm should get some marks. So I means frankly, this is something which I thought may not be, I did not find the rationale why this particular point is getting marks. So if you have more assurance service, you get more marks. If you have less assurance, you get less marks. Does the firm have vision and mission statement? Does it address the forward-looking practice statements plans? Right. So yes. So what is vision is where you want to go, where as a firm you want to go, and mission statement is how you will achieve this. Okay. So it's maximum 4 marks, but it becomes very difficult to ensure that what is the vision and how this has been implemented. So you may say, I want to be the best service provided, but how would you implement this? So it's always somebody will ask that you have this, but what is the linkage between the vision statement and the mission statement and actual in practice how it is being done? Otherwise, as I said, this should be there. Vision and mission statement should be there. I'm saying the challenge in evaluating. The next is presence of accounting manual containing firm's methodology that ensures compliance with auditing standards and implementation thereof. Now, all the firms would have some kind of documents about how do you accept the client, audit report, checklist. They may be scattered. I think this needs to be consolidated at one place. Peer reviewer normally comes and asks, this is the first question. How have you accepted the client? How do you ensure that there is an independence which has been achieved? So the whole methodology, right from client acceptance to issuance of report, firm has some or the other this needs to be compiled at one place, And if there are any gaps, these gaps needs to be filled. But if it is yes, then 8 points. If it is no, then 0 points. Firm may have it. Displaying this as implementation could be a challenge. The next is availability of standard formats relevant to audit quality, like letter of engagement, representation letters, significant work papers, reports, and implementation thereof. This is meant, this is for the efficient audit also, this is required. This can also be part of audit manual. But if you have it, because I've seen a lot of times, different partners have different formats, different offices have different formats. So I think all this needs to be, vetted, put it on the central server where anybody can access and should be updated on a regular basis. Usage of client acceptance, engagement acceptance checklist, and adequate documentation. We saw this in SQC1. This is again repeated. The whole client acceptance, engagement acceptance, which is important. One thing which I want to mention is client and engagement acceptance is we should also ensure that not only about independence and about the background check about the client, but if there is any complexity, whether we have the bandwidth to serve this client. We have the expertise to serve this client. So suppose we are getting audit of bank audit. Do we have expertise to serve? Because the risks are higher. Correct. Do we have enough specialists we can have access to? So please be mindful. Client acceptance, engagement acceptance does not mean about background check about the client and other things. It applies to us in-house on our capability and the competence. Evaluation of independence on all engagements. Correct. We have seen the firm must identify self-interested, familiarity, intimidation, self-review threat. Correct. Important self-review threat. One example I can give is, suppose we have done the valuation of the company, correct, and then the client comes to us for the to make us auditor. Then it's a self-review. Unless somebody else has reviewed your valuation report and based on that come to that conclusion, it becomes a self-review threat, and it is a challenge that for us to accept that audit engagement. Does the firm maintain and use engagement withdrawal rejection policy template? Same thing, engagement exercise. So all this standardization, when to withdraw, correct, how to withdraw, correct. We can't resign from the audit. Just so depending on the entity which we are auditing, what is the procedure for, so it can be escalated. Number one, within the firm, have discussion with the management, those charged with governance, if there is an audit committee. If it is a listed company, then SEBI has its own a set of requirements. ICAI has also come up with the guidance on resignation. So all this needs to be followed. Also it is possible that we need to inform the regulators about the withdrawal. So all this policy and the templates firm should have. Availability and use of standard checklists in performance of an audit for compliance with accounting and auditing standard. Mind you, a checklist filling is not article's job, which is I've seen a lot of times the article fills the checklist. The firms may have. One needs to ensure that we don't miss out anything, and we have taken the right complied with the auditing and accounting standards. So that review of that checklist is important. Again, this availability and standard formats for audit documentation. So business understanding, sampling basis, materiality, data analysis, and control evaluation. This always helps us, as I mentioned earlier also, for being efficient in the audit. But if the standards needs to be there, needs to be updated on a regular basis. And ensure that this is followed across. It is not qua partner, qua office. It has to be across the practice. I've seen this. Are the documents related to quality control so and so are reviewed and updated on a frequent basis? Correct. So I've mentioned this. All this is a point. I'm not getting into the points, 4 points. Yes, no points are there. The next is, does the firm carry out capacity planning for each engagement? So capacity planning is not only how many people will be required for carrying out this engagement, but what kind of expert is being required. So if the company has derivative instruments, do we have derivative financial instrument experts, which is in the team, or complex IT system? Do we have an IT person who can review that complex IT? So this is called a capacity plan. Say what is the expertise which is required? Do we have the bandwidth for so competency and capability? That is what is important. Then is the process of budgeting and planning of the efforts required maintained? So it's all budgeting. So how much time do we budget? When do we budget? So the budgeting of the resources, number one, it is at the engagement level and it rolls up at the firm level. And this is split down into hours, days, and weeks. So idea is that we need to have smooth audit, efficient audit. So if there are clashes between the team, these are all practical measures. If there is a clash between the team, then the people get squashed between two teams. And if we need expert when do we plan expert? So all this is taken care in budgeting and planning exercise. Then our budgets versus actual analysis of time and effort spent carried out to identify costing and pricing. Very, very important. And I've other than large firms, I'm not sure many other firms must be doing it. Because, ultimately this is the crux. We need to be efficient in our audit. At the same time, we need to ensure that our audit quality is high. So we need to budget it accordingly. So one is the budget and the next is actual. We should know what is the cost of serving this engagement, what is the cost of serving this client, and then what is the revenue, because after all, we are a commercial enterprise. So we need to make money out of it, and hence these exercises will help. Then throughout this, we'll see many use of technology. And this is starting from here. So does the firm deploy technology for monitoring the effort spent? So utilization of tools to track each activity, similar to project management, say timesheet, task management. And it says that digital competency maturity model version 2 may be referred to arrive at technical maturity. So idea is that companies spend crores of rupees on IT. Can we be left behind? If we don't understand that IT, then companies will stop looking at us. So we need to also update ourselves with the IT which the companies has implemented, and also use auditing tools which use IT, and that will come separately. The idea is that technology deployment, and this we will see across the document, and we will not dwell too much into it. But as I said, unless we talk the language of the client, we understand their complex IT system. Without IT, there is, I don't think there would be hardly any companies which do not use IT systems. And unless we understand and may make use of it, I do not think we will be able to identify the key risk for that business. And how do we address those risks? We need to understand, we need to have IT expert in the team, in the firm. Does the firm have partner review, quality review on all engagements? And is there a document of time spent on? So idea is partner review is must, but quality review. So the engagement quality review, what we saw. So wherever there is a, it is not mandated on all the engagements. SQC 1 says for listed ones. However, as I mentioned, it is possible that a firm may have, in addition to listed ones, any engagements which fall into certain criteria must have a engagement quality reviewer. So idea is, purpose is this is that whether engagement quality reviewer is there, and is there a document of time spent on the review of the engagement. So how do you ensure that the engagement quality reviewer has spent the time? So what kind of meetings engagement quality reviewer has attended? What kind of questions has been asked? What kind of time which has been charged on the engagement? That is important. Then the next is total engagements having concluded to be satisfactory as per quality review versus number of engagements. Now this is this is according to me, this based on one of the SQC1 requirement is the monitoring. Right, six components of quality. So one quality is last is the monitoring. So the firm may have all the policies and procedures, but what is the basis on which firm concludes that all these are functioning, as required? So the firm will monitor and do some kind of review. So this is as per the internal reviews which is being done by the firm, where the quality review versus number of this. Here I would say, if it is up, it should be negative because this is fundamental. I have done the audit, but and there is an internal review which is being done, and the internal reviewer says that only up to 10% of the files which is reviewed, it is complying with the quality standards, and it is 0 point. I would say this is negative, and this has to be a significant negative one, because if the internally firm only concludes that my files do not pass through the quality test or only 10%, it's not a 0 point. I should have a significant negative points on this. That is my view on this. Now this is number of engagements without findings by. So now the institute also does the review, right? So any institute review, regulatory review. And here also I should say that there should be strong negative points. If so it says 10 to 30%. So if there are 10 files are picked up and only one file is of good quality, then one gets 4 points. Because 90% of the file is not up to the mark. I should be getting negative. Documentation of the firm in accordance with SQC1. Now it's a whole topic by itself. I have explained to you in nutshell. Correct. All the 6 components are here. This is fundamental foundation of quality. And if this is not there, I'm not looking at the points, but firm could have a serious consequences if that documentation is not there. Does the firm have accounting and auditing resource in the form of soft copies of archives, Q&A, firm thought leadership, and dedicated shared? Now, so this is important. Number one, complexities are increasing. The regulatory requirements are increasing. The businesses are becoming complex. So what are the challenges? What are the issues? How those have been addressed? Where is the technical literature? Correct. I think if that is available, that is very, very important. If it is not available, I've seen many firms, though don't spend, they may have big clients, but, anything requirement, it's done on Google search. It's not appropriate. Everything needs to be stored, at one particular drive. which can be accessed centrally by all. So that is what is expected. If there are any significant complex issues which arose and how those has been addressed, if that knowledge could be shared across the firm, that is what is expected. Here, mind you, confidentiality is something which one needs to be careful, because one should not discuss in such a way that the whole firm knows what was the significant accounting auditing issues arose in one particular file. Specifically, those are public interest entities or listed ones because of the confidentiality. Also, what is expected is the thought leadership. When the firm grows in the audit, firm develops sector specialization, then firm should come up with thought leadership. Thought leadership on new accounting topics, new auditing topics, new sector topics, how that will impact accounting and auditing. That not only helps the clients to understand the nuances, but also it helps the firm. Because once there is a thought leadership, the firm and those members will be considered an expert, and clients will come and consult them. So idea is, how do we have win-win, one for the clients also and for us also. And last but not the least, shared technical desk. Because of the complexity in accounting, I think I'll give you one example. If there is some complex accounting which is there, one can go and consult any technical expert within the firm. So there are many firms who would have people who are technically expert, and whose one of the responsibilities is also to do consultation on technical matters, be it accounting, be it on auditing. The next is the appropriate time spent on understanding the business risk assessment, planning, engagement, how the risks have been mitigated through performance support. Very subjective, pertinent point, valid point. That is the crux of audit. However, may be difficult to prove, or maybe, this with SQC1. But the idea is so very, very pertinent point, focal point of audit. Does the firm follow, implement standard delivery methodology, adoption of manual and practice and tools? Very important point. As I said, firms, unless there is standardization, this will not only improve the quality as well as bring in efficiency, but many times I've seen it is, firms growing. So all this methodology and this becomes partner specific or office specific, branch specific, but not across the firm. So this should be focused. The number of statutory audit engagements rework. and here there is a negative score. So less than 5%, 0 point, more than 5% to 15%, -1, 2, 3. Again, here it is very, no engagement should be, reworked. That means whenever the audit was done and the opinion was issued, it was not up to the mark. And then it should be strong negative points. Number of clients dispute other than fee disputes and how they were addressed. Now disputes do happen, right? So is the, for example, is the qualification a dispute because it's a difference in the view, or is the resignation a dispute? I would feel, these are not disputes. These are all, if there is something which gets into legal, that is something which one has to look at it, because disputes are here to stay. Regulators are looking at it closely, whether we have brought out appropriately in the audit report. So if there is a qualification, does not matter. If there is a resignation, then there is, so long as the company has followed that process, that should be also be fine. So the idea is that if there is anything which has gone into legal, then that is the area which one has to look at it. Are the timing of audit interactions with the management planned in such a way that integrates with the auditor's requirements so that audit timeline can be met? We do it, right? We look at the timeline, we break it up. So any listed company which gets signed up in say April or May, the work doesn't happen in March. The work starts 6 months early. But so long as it is planned, and there are proper meetings which are held, this is something which we should take care to avoid, number one, last moment surprises to the management, number two, undue stress on the team, number three, to improve the quality. See here, a lot of things what is being mentioned, we do it, we may not have documented. And idea is, if it is not documented, it is not done. I'm going back to my earlier one is, based on reading of the document, any experienced auditor will come to the same conclusion as the auditor, itself. Any experienced auditor who is not on the engagement. So the documentation is fundamental. We do a lot of work. We do probably more work. We need to document, and that is where we lack. So awareness meeting correct with the clients. Of course, we do it. Updating client on audit issue. We do it formally, correct. But we should do it formally. We may have been doing it verbally. These are the issues. But what is expected is it is to be done formally, with the management and those charged with governance. If there are any changes in accounting or auditing aspects, correct, then of course we discuss with the client, but evidence of being done. And follow through on previous audit observation and update to management and those charged with. So that is our starting point normally. But the idea is that how we have done it and there is evidence of doing it. The next is monitoring planned hours versus actual hours across engagement. The focus is on the existence of monitoring mechanism. I think we discussed this. What is planned hours? What is actual hours? So this is coming, as I said, some questions are getting repeated. Digital auditor, I think a lot of new tools, new methodologies of audit, and we should, get acquainted with what is happening. Again, if client is, investing heavily onto all these tools, we can't say that we don't understand. This is not us, right? So we should understand them. We should evaluate from the audit perspective that what are the significant risks and how are we address those risks. And that is what, I'm saying. So, it could be mobile, it could be blockchain, how we analyze the data, AI, IoT. So all this is, I'm saying, we can't, go, earlier we used to say it's a black box approach. We can't say that it's a black box. We do not understand what is happening. We need to understand what is happening in the system. And we need to have expert either within the team, within the firm, or outside experts who are part of engagement team. Technology adoption. So it says video conferencing facility. Of course, now we are doing this session on Zoom. COVID has taught us, but video conferencing. Does the firm use only licensed operating software? Very important, because if we don't use the licensed one, there is a risk, and that risk could be losing clients' data to own email versus email domain. So if somebody is using only Gmail, Hotmail, Outlook, then 0 points. If somebody has its own domain name, then there are 4 points. Use of antivirus, malware protection tools. Everybody uses it. Subjective, because what is enough, I do not know. data security, cyber security measures. Best of the companies have faced these challenges of data security, cyber security. So how, this becomes subjective, as I said. These are good guiding points. We should focus on this. We should be mindful of this. We should address them. Don't get into the points, as far as this is concerned, because there is no limit to this. We should do it based on what is, reasonably expected, so that, we maintain the data security, cyber security. Internal communication. So whether one has intranet, email is of course there, but even intranet. As the firm automated its office with automated attendance and leave management, very important, useful. But smaller firms may find it challenging, but otherwise I think most of the firms, these are not expensive tools. Project activity, timesheet, I think this is also we have discussed. Digital storage of records. How do we store these records? Correct. Then where is the server? Do we have the server or the cloud? Correct. Where the data is stored. All the digital library. Client interactions, alerts, updates. So I think all this technology, I think most of this is there with us, and more so COVID has taught us. Technology, awareness and adoption of tech. So that was within the firm. Now, how do we use it for service delivery? So, do we use any audit tools for technology, analytical tools, data visualization tools? Correct. So, how do we adopt that technology for the delivery to the client? One is internal, earlier what we discussed, now it is to deliver to the client. Correct. And all these are very important. I have made, as a firm, we had so many tools, and when we demonstrated those tools, clients were really happy. Lot of this analysis gives, because, in analytical tools, it's not one sample. We take 100% of the data and analyze that data. It gives so much of confidence to the client and to us as auditors. So even if clients have millions of line items, if it is analyzed in the manner which gives us as auditors greater comfort, as clients greater assurance, right? And we learn it gives us a lot of insight that adds our knowledge over. Now, whether client-wise revenue is in compliance with the code of ethics. So, code of ethics says that any fee from client should not exceed 40% of revenue, and once the deferred clauses of Part A are implemented, then this will get reduced to 15%. Again, why so? Because of independence. If we are not independent, it has the whole host of challenges as far as the audit report which we have signed. That is where there should not be concentration of any client as far as the fee is concerned. The next is very important. We have seen this. Fee considerations and scope of services should not infringe upon the quality of work and documentation. Right. So quality is the responsibility of leadership. If the fee is less, it doesn't mean we have to spend less time. If the fee is more, it doesn't mean we have to spend more time. We need to spend time which is adequate, which increases the audit quality. So if it is less fee and if we do spend less time, we can't cut down on any of the auditing procedures. Adherence to minimum scale of fees. And these are all the marks which are there. I'm not getting into wherever there is a comment on the marks, I'll make those comments. The next is human resource management, where we have seen there are 240 points which are there. The first one is, does the firm have a process of employee resource planning for engagement based on skill set, requirement, experience? skill set matrix, correct? On the engagement, if there is any complexity. So what is the competency available? And where those competencies, so if the engagement needs those competencies, are they there available either internally, if the employees is there, not everything can get outsourced, but that skill set mapping, who is good, suppose there is somebody who is good in say bank audits, we should know when we accept the bank audit. If somebody is good in say telecom audits, we should have somebody in the team who understands how the telecom audits are being done. Then on what basis the resources are allocated. All this will be, spreadsheet. So all this comes as a part of tools. And is there a method of tracking employee activity to identify resource productivity? Again, timesheet. This is a very important tool, timesheet. I've not seen many firms use timesheet as the tool to manage the practice. But this is a very, very effective tool of ensuring on timely timesheets are filed and analyzed. It gives us a lot of insight into the practice. It's a separate topic of discussion by itself. Does the firm maintain minimum staff to partner ratio, partner to managers? Many times I've seen firms doing large audits, complex audits, and mainly reliant on articles. Now, not to take away, articles comes up and they have their own strengths. But for auditing complex public interest entities, one requires experience, right, seniority. And because either, the firms are not able to retain, or that because of from a cost consideration, it is solely dependent on articles, which may not be, appropriate from audit quality and from the risk mitigation perspective. This also is a tool and topic by itself, utilization and realization. So is all employees are utilized appropriately? And one has to look at what is the available time, how much time is for training, how much time is the leave time, and how at each level, how much utilize each people, how much has been utilized. Overutilization does not augur well. That means people are overstretched, overworked. Underutilization also does not augur well, and hence this needs to be balanced. Does the firm and resource plan for each engagement and file it reference to? So again, this is a plan. Now we are coming to training. This is important. We do it. However, again, I'm saying this needs to be evidence. So does, the firm have an employee training policy? Policy is minimum is what is, statutorily determined. But in addition, firms may have more. But also not only this, but also what kind of training which is being given. So one is the technical training. Second is the managerial training. The third is communication skills. The fourth is, different specialization. So all this is in a holistic manner. And, this is all which is being given guidance. So we are not getting into it. But I'm saying 60 hours and what point and specialized training and what point, what kind of training. But the idea is that if we need to retain people, we need to focus on their training. If we need to deliver quality audit, we need to train them. If we need to mitigate the risk, we need to train them. So training is very, very critical and important. Number of professional development hours, days spent as a firm per employee. Correct. Again, we have seen employees are equipped with technological skill set. All we have seen. This is more relevant to this also we have seen more relevant for the large audits, correct, which are PI and all. Audit team should be aware of data analytical tools and comprehend the results of the tool to adjust the audit strategy. Because if data analytics gives throw up something then if there is a risk, that becomes a focus area of audit. And adjust, we should change our nature, timing, and extent of audit strategy based on that. And a lot of these, so technologies like AI and blockchain may be considered as an incremental factor for differentiation purpose if the forms are scored at the same level. Again, this becomes a management responsibility whether the firm has the performance management culture that rewards high performing employees and those who demonstrate high levels of quality and ethics. If we don't have this, the firm is doomed to go down, because from each one firm, we just look at the firms which are successful, because we can't grow on our own. We need to have people, correct? And unless we reward, correct, high performing employees and those who demonstrate high levels of quality and ethics, people will go. If they get on any opportunity, they will go. If we don't have this policy. Does the firm evaluate team composition overall to build the team strength, say number of managers, assistant managers? Again, I think we have discussed this point. I will not get into it. That the firm maintain and monitor employee turnover ratio and identify measures to keep it. Very, very important. We do it, but I think we should be mindful. I'm seeing a lot of people, they do not understand that what are the expectations of employees, right? So, and we need to take steps. So I'm giving you one very example. One may agree or disagree with this, but I've seen people who will say that if there is a long holiday and the employee takes the leave in between the long holiday, then all the days will be considered as a leave. On the contrary, those long leaves, holidays, where in between there is a 1 or 2 working days, if those employees are encouraged to take that leave, the morale of the employee is different. In many places where we do not give leave, or we stop giving leave or refuse leave for flimsy reason and without understanding employees why they want it, and they may want it for as a personal time. We need to appreciate this. They will not be committed to us. Qualified professionals, so qualified resources available with the partner. So more qualified, that means one gets more points. Identify the reason for the turnover. So does the firm evaluate employee rotation with the firm and identify the reasons? I think this needs to be documented, because this is all as a part of HR. Then what are the benefits which we are giving? So health insurance benefit, other benefits which are available. So some are statutory, but in addition to statutory, what kind of benefits which we are giving? Does the firm evaluate for which kind of audits does it has revolving door? Many times, people don't stick on particular audit, or people don't stick. So the employee turnover ratio is significantly either high, either on one particular audit or with one particular partner or one particular office, right? One has to get into the reasons behind this and take steps as corrective steps, because it is possible the client is difficult, the partner is difficult, the office culture is different, because it's not standardized. Progress of people through established framework and time commitment of so and so engagement. So here the idea is that how do people progress? I've seen one of the reason people stick, or one of the reason people go, is that there is no enough career guidance. Of course, people will leave because they get better opportunity, and we should gracefully, if we are not able to meet, we should be graceful with the people, because should there be a challenge, they come back. And I've seen a lot of times people coming back. So we should maintain those relationships. But having said so, many times what I've heard is that people leave because they are not being provided proper feedback, which is not given or engagement level on their performance, on their career development, because they look at us to develop their career. And if we don't give them those guidances, they will leave. And we need to be mindful that people will leave. Everybody is there. They are not here to do charity. So they will leave if they get better opportunity. And we should be graceful about it. Access and use of infrastructure for better enablement. I think this we have discussed. Coaching and mentoring. Again, this is what. And especially for women colleagues to enhance diversity. Correct. How much is the diversity in the practice? I think that also we should look at. Special policies to provide people time to rejuvenate, especially after busy audit season. Nowadays, there are no off audit season. It starts with quarter on quarter, with year end, with tax audit, and some of the other engagements. It's true. But I think whenever there is a time, I think we should be mindful and be graceful to people, to give them extra time, teaming activities or leave after a busy season. I think that is, appreciated. Focus policies and support for staff well-being, engagement and communication. I think staff well-being, we have, that it's so important, and that is what we have seen during COVID times. So that how do we communicate the mental well-being of the people, and that is what is important. And establish mechanism to listen to people and their views, suggestions. So I think what is the way in which we have, we have this review the suggestions which are there. It could be given with the name, it could be anonymous, but I think so long as these policies are there, it augurs well. What I'm saying is, lot of these points, whether it is there in the audit quality or not, it helps us to run our practice better. Standard of for recruiting people, assessment methodology, evaluation of quality and fitment for the job. I think we do it right. Why do we recruit people, at what level? What is the job requirement? Who should be appointed at what level? Right? How the performance is evaluated? How do we ensure that that person is the fit for the job? Because if that person is willing to join at a junior level, but if it is he or she is too junior, will not stick long. It will, that person will leave the moment that person gets the opportunity. And if that person is, we appoint that person at too senior a point, it's a risk, and people below them will leave. So idea is that that proper fitment should be there. Are employees of the firm compensated as per defined approach where salary is mapped to knowledge and experience? So long as there is standardization, I think that this helps. This helps people to understand what is the range of the salary, what are the range of bonuses, and how these are being paid. Number of professionally qualified members, ACA, FCA. So higher the numbers, higher is the point. And number of people with post qualification. So DISA, IP, correct. So one is number of CAs and all. Number two is number of CAs and others who have those specialized knowledge. And whether all partners have complied with CPA requirement. Of course, this is mandatory. If it is not there, it has greater consequences. Members with specialized courses or certification. Ranking can be based on newer areas. So, not only those specialized areas, but IFRS, Ind AS, that is what is the example. If we have more numbers of those specialists within the team, then there are higher marks. Does the firm have written KPIs for performance evaluation of the firm and partners? Method of measurement of evaluation are determined. So idea is that the evaluation, what are the areas, what are the KPIs? Are those determined, measurable, objective criteria which are there? Correct. Then does the evaluation happen at a frequent level? and what is the frequency and whether that is consistently. So it could be quarter, it could be half year, but it should be at least annual. Correct. And the most important is if any partner, whose quality review is not good, that partner should be, considered accordingly. Because it should be based on the review results of the engagement. So if the quality is high, that partner should be considered high on the quality, and the quality is, the one of the main benchmark for the evaluation. The next is strategic and functional. I'll run it fast. I think we've got few minutes. But these are all, one can read. I'll share the presentation. So should be balanced mix of, new experience and new partners, because new partners brings different skill sets. Old partners bring more experience. So I think it's a balance which is there. Is the firm compliant with Code of Ethics, Companies Act and all? So Code of Ethics is important. Is there a whistleblower policy? It's very important topic by itself, why whistleblower policy is good for, in any organization. Number of branches and associates. Now more number of branches and associates, higher is the point. So idea is that, geographical, size of the firm. Are branch level activities centralized, decentralized in accounting, invoicing and payroll processing? If it is centralized, higher point, decentralized, lower point. I have one comment over here. I think one thing is accounting, invoicing and payroll. Most important, I'm repeating, is that it has to be based on consistent audit methodology. It should not be qua partner, qua office. It should be across the office, same methodology which should be used. Physical and logical security of information are extended and implemented across locations. So that is important. Adequate DA tools and IT infrastructure as they are being used relevant for the assignment. I think we have gone through this. This is on the hardware, that was on the software. Is infrastructure adequate in terms of intranet? So what is the infrastructure? Is the ICAI peer review? If it is yes, then higher points, no, then less points. M panel with RBI, CAG, higher points, because they have certain criteria. If there is any advisory or decision not to allow work due to unsatisfactory performance by CAG office, then it's a negative point, valid negative point, because if it is advisory, there is an unsatisfactory performance issue, then there is to be a negative point. Then has any government bodies, authorities evaluated the performance of the firm to the extent of debarred? So if the firm is debarred, then negative points. It could be 10 or higher should be, it's a question, but I think valid point. Negative assessment by QRB, negative point, valid. Has there been case of professional misconduct on the part of members of the firm where it's been proved guilty? If it is there, it should be higher, but here it is 5 points. So that's it from my side. I've been trying to, complete within the time allotted. As there are no questions, I understand people must be busy in the tax audit.
There are two questions, sir, actually. Initially at the start, I hope it was addressed. Actually. Can you see it in chat box, sir?
Sorry?
There were two questions at the start of the session. It was a tax order limit for a corporate and what is the turnover limit to carry out?
I think that is not pertaining to this
topic.
Yes. Topic.
Understood, sir. So I will check with the audience if there is any questions. You can post it, or else you can unmute and ask, or else we'll wind up the session.
Sure. Yes.
We have given option to unmute and interactive meter. So the presentation will be shared with us later, right? So we can subscribe to the audience.
Yes.
Sure. Thank you, sir.
So it's a dull topic, I understand. So there are no questions. So either they've understood everything, or it's
Everything was pretty clear. So we'll share this recording and also the
Sure,
materials that is shared with us, so that they can rewatch, and if there is
Right,
any,
right.
they will write to us or else to your mail ID, and time permits you can respond, sir.
Sure.
And thank you so much on behalf of
Thank-
SIRC office bearers, chairman, vice chairman in the absence. Sir. Thank you so much for time spent
Thank-
here, sir, on knowledge dissemination. We look forward to have you in future for physical session also.
Sure.
Chennai, time permits.
Yes.
Sir.
Yeah.
So vice chairman couldn't join at the end since he's engaged with another meeting.
No, I can understand. Don't worry. Yeah.
And thank you so much, sir.
Thank
you,
you.
sir.
Thank you.